For 4 years, Tesla sent Elon Musk $37,000 a year. California minimum wage law. Those 12 targets just paid out $114 billion. 5 days later, SpaceX set a new one, $7.5 trillion. But if you hold Tesla, your company's approved target is $8.5 trillion. 75% of your fellow shareholders voted for it 5 months before SpaceX made headlines. Almost nobody put those two numbers in the same sentence. Both plans have specific structures. Start with Tesla. 12 tranches. The first tranche triggers when Tesla's market cap reaches $2 trillion. Tesla is currently worth approximately $1.1 trillion. He cannot collect a single share of the 2025 plan until Tesla almost doubles from where it sits today. After the first tranche, each subsequent milestone adds $500 billion in market cap, all the way up to $7.5 trillion. The two final tranches each add $1 trillion, pushing the ceiling to $8.5 trillion. The operational milestones alongside those market cap targets: 20 million vehicles delivered, 10 million paid full self-driving subscriptions, 1 million Optimus robots delivered, 1 million robotaxis in commercial operation. These are the line items in the compensation agreement that 75% of shareholders voted on in November 2025. Now, SpaceX. The SpaceX plan has two triggers. Trigger 1, $7.5 trillion in market cap. Trigger 2, a permanent Mars colony of 1 million people. Both conditions must be met for the larger award of 200 million shares. There is a third award separate from those two, tied to building orbital data centers that deliver 100 terawatts of computing capacity in space. But here is the detail about those SpaceX triggers that almost no coverage picked up. The SpaceX board approved those targets in January 2026. 3 weeks later, on February 9, 2026, Elon publicly announced that Mars plans were being delayed 5 to 7 years to focus on the moon first. The Mars colony trigger is in the legal document. He then delayed Mars. Hold that, we are coming back to it. Now, the context that makes both numbers land. The most valuable company in the world right now is Nvidia, $5.26 trillion. Nvidia rose 1,400% in 3 years, driven by AI chip demand. It generates approximately $130 billion in annual revenue today. SpaceX generates approximately $15 to $18 billion in annual revenue today. To reach $7.5 trillion, SpaceX needs to be worth 1.5 times Nvidia, with roughly 1/8 of Nvidia's current revenue. Tesla's $8.5 trillion target would be worth 60% more than the most valuable company that has ever existed. Look at those two numbers side by side. 18 billion in revenue today, $7.5 trillion target. That is the size of the bet. I want to be clear about something. This is not evidence that either plan is impossible. The 2018 Tesla plan looked exactly like this, and that plan paid out. What these two numbers tell you is the scale of what both plans are betting on. Two companies transforming into something that has never existed before on the same calendar, run by the same person. Which brings us to the part of this story that directly updates the argument I made in my last video. If this breakdown is useful, hit like and subscribe. I go this deep every week. In my last video on the swap trade, the core argument was this. Elon owned 43% of SpaceX and 13% of Tesla. Every decision that benefited SpaceX rewarded him more than 3 times as much as the equivalent Tesla decision. That asymmetry was structural, not personal. Link to that video is below. That number changed this week. After the 2018 Tesla plan executes, his Tesla stakes rises from 13% to approximately 16.8%. The SpaceX stake stays at approximately 42%. In percentage terms, the gap has narrowed from 3.3 times to 2.5 times. You might read that as good news for Tesla holders. The percentage is misleading. SpaceX at 1.75 trillion times 42% equals approximately $735 billion. That is Elon's SpaceX stake in actual dollars. Tesla at 1.1 trillion times 16.8% equals approximately $185 billion. That is his Tesla stake in actual dollars. The dollar ratio is not 2.5 times, it is 4 times. The percentage gap narrowed, the dollar gap widened. Because SpaceX's absolute valuation is so much larger than Tesla's, even a smaller ownership percentage represents a much bigger financial stake. Now consider what Tesla's own board wrote in a public SEC filing. Quoting directly, a majority of Mr. Musk's wealth is now derived from other business ventures. The Tesla board wrote that sentence and filed it with regulators. That is not a critic. That is the company asking shareholders to approve a plan specifically designed to change that fact. The 2025 Tesla plan, if all tranches vest, takes his Tesla ownership to approximately 24 to 29%. Both boards are now competing financially for the same person's calendar. Tesla's board has put $1 trillion on the table to close the gap. SpaceX's board has put $7.5 trillion on the table to keep it. Now, we come back to Mars. The SpaceX board approved the Mars colony trigger in January 2026. 3 weeks later, Elon publicly delayed Mars by 5 to 7 years. What the timing tells you? The Mars colony is the target that gets the headlines. The real compensation mechanism is the valuation trigger, which vests in tranches as SpaceX's market cap rises. The Mars colony is what people talk about. The valuation tranches are where the money actually moves. The same structure that just paid out as Tesla. But that raises an obvious question. Should you take these valuation targets seriously at all? And the only honest answer to that question requires you to understand where the $114 billion actually came from. The structure was designed before the headline dropped. The sequence matters. In January 2018, Tesla's board put a document in front of Elon Musk. 12 performance targets. The first, Tesla's market cap had to reach $100 billion. At that time, Tesla was worth $50 billion. Each subsequent tranche required another $50 billion in market cap, all the way up to $650 billion. Analysts who read that document went on record. The word most of them used was laughable, a 13 times increase, for a company that had never posted a full year of profit. Elon signed it with one condition: zero base salary, zero bonus, zero cash of any kind unless the milestones were hit. California law required Tesla to pay him at least minimum wage. Tesla sent him a check for $37,000 a year. That was every dollar he received. For 4 years, while the Model 3 production line was so broken that Elon later said he was in severe pain from the stress, while the SEC was investigating him, while short sellers were publicly betting the company would collapse, he drew minimum wage and kept going. He hit all 12 milestones in 4 years. Then in January 2024, a Delaware judge voided the entire package, all of it. The board approval process was flawed, she wrote. He nearly walked away with nothing. 18 months of litigation. In December 2025, the Delaware Supreme Court reversed the decision. On April 21, 2026, Elon signed the implementation agreement. Tesla registered 304 million shares with the SEC 3 days later. The option price on those shares, $23.34. Tesla's current share price, approximately $376. Hold those two numbers, $23.34 and $376. That gap is what a bet on 12 impossible targets look like when it pays. That is also where the 16.8% Tesla ownership comes from. The 2018 plan, executed in April 2026, moved his stake from 13% to 16.8%. The delta between those two percentages is the 2018 bet paying out. The 2025 Tesla plan started running the same week, the same structure, 12 tranches, no salary, only milestones. The person who just cashed the largest paycheck in corporate history immediately entered a new plan targeting a larger number. 5 days after signing the Tesla agreement, SpaceX announced its own version. And now you need to understand what you are actually getting if you buy in. The full IPO mechanics, the voting structure, and exactly where retail investors fit in the buying chain, I covered all of that in my last SpaceX video. Link is in the description. What is specific to this compensation plan? The targets, the share structure, and the design were all locked in before any public investor saw the first document. The compensation plan was approved in January 2026. The IPO filing came in April 2026. By the time SpaceX's CFO stood in front of 125 bank analysts on April 6, 2026, and called the retail investors the most critical part of the largest IPO in history, every structural decision had already been made. 2 independent valuations are worth knowing before the IPO price lands in front of you. Aswath Damodaran is a professor at NYU. Investors call him the Dean of Valuation. He built an independent model of SpaceX without access to the prospectus, broke the business into segments, and ran the numbers himself. His valuation, $1.2 trillion. PitchBook, one of the most widely used financial data platforms among institutional investors, arrived at the same range. Both landed approximately 30% below the 1.75 trillion IPO price. Damodaran said publicly he would not buy it at this price. He also said SpaceX is one large correction away from being fairly priced. That 30% gap between the independent estimates and what you would pay is the premium for arriving after the structure was set. Now the 100 terawatt orbital computing trigger. SpaceX has filed plans with the FCC for up to 1 million orbital data center satellites. That filing is real. The near-term orbital computing plans are commercially plausible. The compensation trigger is a different thing. 100 terawatts of computing capacity in orbit. The entire global electricity generation capacity today is approximately 9 terawatts, total on Earth. The trigger in the compensation document requires more than 10 times the planet's entire current electricity output delivered from space. Elon's own stated path to this requires producing AI satellites on lunar surface and launching them with mass drivers. That sentence is in a legal document as a compensation trigger. Some of you are already forming the objection. The 100 terawatt trigger is a long-term aspiration. The real compensation is tied to the valuation tranche that vests as SpaceX's market cap grows. That is exactly the right read. But follow it to where it leads. If the mass trigger is theoretical and the 100 terawatt trigger is theoretical, then what you are actually buying is a valuation bet. A bet that SpaceX goes from 1.75 trillion to 7.5 trillion at a 30% premium above independent valuation, with every structural decision already made before you arrived. I want to hear from you. You hold Tesla. Tesla's approved target is larger than SpaceX's. Does that change how you are thinking about the IPO decision? Tell me in the comments. The actual trade, stated plainly. If you hold Tesla, you are inside a compensation structure targeting $8.5 trillion, run by a man who just proved he hits these structures. The 2018 plan paid out $114 billion. The 2025 plan started this week. Tesla must almost double from here before Elon collects a single share of it. That doubling is the first test of whether the plan is real. If you sell Tesla to buy SpaceX at IPO, you are entering a structure where the targets were set before you arrived, the governance was locked before the filing dropped, and 2 independent valuations say you are paying a 30% premium above what the math supports. One number to carry into the next Tesla earnings report. Tesla disclosed $9.97 billion in unrecognized stock compensation expense from the 2018 award. That charge hits earnings over coming quarters. It will compress Tesla's reported profitability regardless of what the car business does. That context belongs in the frame when you read the next earnings number. The honest question at this point is not about which target is bigger. It is about whether one person can run two compensation plans that each requires him to build something that has never existed before. Both plans are running simultaneously. Both requires his full attention to hit their milestones. That question has no answer in this video, but it is the right question. In my last swap trade video, I looked at this decision from a different angle. The Ockman proposal, the loyalty question, and who is already moving on the institutional side. Link is in the description. When I found that the Tesla target was larger than the SpaceX one, I did not think about which stock to buy. I thought about who designs these structures, and whether the answer to that question was the same person as the one being invited to participate in them. If this gave you a clearer picture before you make a move, hit like and subscribe. I go 3 layers deep every week. 3 things I am watching. 1. When the SpaceX S1 becomes public in May 2026, look at the government and defense revenue breakdown. SpaceX holds over $22 billion in cumulative government contracts from NASA, the Department of Defense, and the US Space Force. How much of the path to $7.5 trillion depends on that revenue staying in place and how visible it is to public shareholders. A contract that can be cancelled is a different asset from one that cannot. 2. Watch whether Tesla's market cap crosses $2 trillion. That is the first tranche threshold in the 2025 compensation plan. At $1.1 trillion today, Tesla needs to almost double before Elon collects a single share of the plan that is supposed to close the ownership gap with SpaceX. That crossing is the first real test of whether $8.5 trillion is a plan or an aspiration. 3. Watch Elon's Tesla share count over the next 6 months. He just received 304 million new shares from the 2018 plan. If he accumulates, the alignment argument between Elon and Tesla holders gets stronger. If he sells, it tells you something different about how he reads that alignment himself. On April 21, 2026, Elon Musk signed a piece of paper and became the highest paid executive in human history. For running a company on $37,000 a year while most people said it would not work. 5 days later, he set a new target, a bigger one, at a different company. You are already in one of those structures. The question is not whether the targets are impossible. You already know what he does with impossible targets. The question is whether the structure of the deal you are being offered was built to reward you or built before you were invited to the table.